So today's topic is star automation and its sign reversal. So before that, first we'll understand what is TAR. So TAR is tax account roll forward automation. So it's a feature in Oracle tax reporting that allows the user to map data to new columns in tax account roll forward data form. Users can also copy TAR automation rules from the previous period to the current period. Now there are some things that user can do with the TAR automation. First is customize the report. So users can customize their TAR and TAR regional reports by adding columns to reflect the company's journal ledger chart of accounts. Users can create default or custom mappings. Third, user can use the trace automation option to see how source data moves from book account to tax accounts. And fourth is users can run tax automation for selected or all entities. So we'll see how that will work. So this is your configuration page. How we'll reach up to this page, we'll see how we land up to that page. So application, configuration. So we'll first go to TAR automation and we will configure everything here. So you can see these are above the dimensions. Here it is the movement is automated or the account is automated. Now the source account, what should be the national source account? So it will be current provision. What will the source account for regional? So it will be regional current provision. What should be the data source? It is tax. What should be the movement? It is automated. And suppose this you are doing it to bring the balance from your current provision form. That's why we are saying the source account used here is current provision. So bring the current provision amount. Suppose the current provision amount is 5 lakh and you want to bring that amount as minus 5 lakh and you want to compare it with the book balance. So you can anytime click on this switch sign, so that sign will be switched and it will bring up with a reversal sign. Then the next is your TAR automation book balance. Here you can see you have to define again. This is for the bringing the book balance or the data from the financial statements. So the source account national I have defined for no jurisdiction as current tax expense federal. For source account regional I have defined as current tax expense US state. Data source used is source pre-tax, because this is we are defining these the values here to bring in the data from the financial statement. So this is used for financial statement. What is the data source used there? It is source pre-tax, movement is book closing, and even if you want to switch the sign for the book balance, you can click on here. Now we'll see we'll open parallelly the financial statements and your TAR form. So this is my financial statement, that is the income statement, and this is current tax federal. This is deferred tax expense. So I have applied that I want to bring in this amount in my financial statement. Sorry, from my financial statement to the TAR form. So you can see this is my financial statement, and profit before tax is comprises of 15,452,873. Current tax expense is federal 355 858333. Current deferred tax expense federal is 762500. Current tax expense US state is this. Deferred tax expense US state is this much. So we have applied the logic for this current tax expense. So we are bringing this 3558333 to our tar form. So you can see this is our tar form. Here are all the dimensions defined, like scenario, year, period, entity, jurisdiction, multi-gap currency. These are all my accounts. And here you can see movements. Now movement is ending balance. As per the book that we were seeing, it is 3558333. And now we'll see. So this is what we have with applying that logic, we bring this amount from here to our tar form. Now we'll see if similarly we want to bring the current provision amount. So under package, if you open your current provision, your current provision amount is 5924886, and we have applied the expression, or defined the value, and we have brought this value here, 5924886. So we are saying that this is the ending balance as per the current provision, and this is the ending balance as per the books of accounts. So the difference amount, the journal entry will be passed for this differential amount, that is 2366553, right? And that will be passed in your books of accounts. So this star will help us to know that what tax accounts you want to roll forward it. So this amount, the entry will be passed in the next year. The roll forward of tax accounts will be done. So this is how the tar account tar automation you do, and you can anytime, if you want to reverse it, you can reverse the sign. We have seen the sign reverse. You to just check that box, and if you want, suppose this sign, this amount to be bring it as reverse, like maybe if you want to asset minus liability, likewise, so you can do it like 5924886. If you want a reversal, so you may tick on minus and it will show you here a negative amount. Otherwise, if you want to bring it directly, so this is how we have seen, we have defined the source account values, and this is what is the result for tar automation. Yeah, so that's all for today. If you have any questions, please contact BISP Solutions. Thank you all for your time.